We're joined by Nitin Bhasin, Head Institutional Equities at Ambit, and he's joining to talk about their 11th annual Singapore conference called Ambit India Access. It focuses on the opportunities that we're seeing in India right now. So, Nitin, great to have you on. Very good morning to you, and glad to speak to you here on NDTV Profit. Let's begin by talking a bit about the conference, and why don't you set the stage and the context for us on what would be the key driver of the conversations you'll be having?
For the last 11 years, we've been bringing these companies to Singapore. And many of times, people have been asking investable companies, good quality companies, and scalable companies. At a time in India when everybody is excited about investing in India, and we always have been saying that India has expensive companies in the mid-cap and the small-cap space, investors still are very keen to meet companies in this market cap cohort. So the discussion points would be around which are the good quality companies, which are scalable, run by management teams, and one can disregard the valuations in the near term if one was to take a longer term view. It's not only across one theme, but across themes. So that would be the backdrop of conversations with the investors in this conference.
Now, just to elaborate on that, because this very clearly seems more like company-specific and top-down approach, or bottom-up approach in that sense. What are the parameters that you or Ambit has identified to determine the future leaders of tomorrow, which could be across themes and sectors? So what are those factors that are prime for you when you look at a company and say, look, this could be the future leader?
Good question. I think this has been the thing we've been writing for the last few years as a team, that companies which India is full of companies listed, and the last 2 or 3 years we've seen closer to about 200, 300 companies getting listed in the mid cap and the small cap space. Yet scalability is not for everybody out there. So what are we looking for? We are looking for managements which are designing the business, which are designing the teams, designing the products and the processes to scale up, not only in the present product, service line, etc., but how they can create new markets, how they're actually building talent pool for that. So we look at how they're thinking about capital allocation, how they're thinking about team building, how are they building out their competitive advantages, which sometimes can be fleeting, but to see through that over the next 2 or 3 years. Give an example, like electronic manufacturing services companies. There's so many of them which are coming up in India, but we think there are only a few which are doing it in the right manner and scalable. Irrespective of valuations, I think there are only a few which will scale up. Similar lines on real estate companies, similar lines on healthcare companies. So we are looking at a few things which I mentioned earlier: team, competitive advantages, at the same point in time, going out and building optionalities to get into new markets.
Nitin, just to get a sense of the kind of companies, all right, we've talked about the fact that you're picking companies that you see as the future of the India story. So give us a few examples. Which are the kind of companies that you have found exciting that are going to be part of this conference, and what are the kind of conversations you see panning out?
Companies like Ambit, a company which is one of the leaders in the electronic manufacturing services, how they are transitioning themselves just from simply being a room air conditioner assembly company in the past, now getting into the entire electronics value chain, or even for the mobility value chain through their own subsidiaries. So that's the sort of a company. Perhaps a second company in the real estate space, like a Birla Estates, which is part of the Century Textiles and Industries in Mumbai, how they are building the land bank, perhaps going out of Mumbai to the other regions, asking them how are they identifying which markets to enter into, how to place their product in terms of pricing in the markets where they are new entrants. Or even another example of a company would be something like Poonawalla FinCorp, where we have seen a very good quality promoter family has recently brought in a very good amount of talent pool from a leading bank in India, and they're building the business model for scalability of 5 to 10 times from here onwards. And to have questions with them around how do they want to think about new segments to enter into, how are they thinking about building the collections, how are they building the team. So questions around that. So these are the 3 or 4 companies which we have at the conference amongst other companies like Shriram Finance or an unlisted company like Kisht or Vastu. They are participating at the conference amongst a dozen and a half companies participating.
Okay, so an interesting mix there. Some, BFSI kind of presence, a little bit of innovative presence. I'm just wondering, Nitin, are you as bullish on this whole premiumization trend, where companies that are focusing on discretionary spending, but premium discretionary spending are getting a lot of love from investors right now? Do you see this as a sustainable trend in the Indian markets and some of the companies that are on this track?
So we also have Senco Gold, part of the conference over here, which shows you clearly that how in the eastern part of the country or the other parts of the country, also people are transitioning themselves from buying local jewelry to branded jewelry. For the last 1 year or so, we've been highlighting this trend, that the premiumization trend, whether it is cars, whether it is asset management, whether it is wealth, whether it is travel, because another company that we have under coverage is over here is Lemon Tree. So we're quite positive on this entire premiumization trend in India, and it's actually sort of percolating down in multiple sectors, whether it is jewelry, whether it is watches, whether it is cars, whether it is travel, or even for that matter, healthcare slash, I would say, wealth management also.
The thing that stood out for me is that this is interest from investors worldwide. And some of the stocks that you mentioned have had a pretty strong run. I mean, a KEI Industries is up 90% in the last 1 year. A Lemon Tree has had a phenomenal growth run rate too. KEI Industries, of course, also recently had a very strong outlook coming in from UBS. Are your investors talking about how expensive India is? Because very often when we are sitting here, a lot of the FIs talk about how India looks expensive as compared to its peers. Companies have stretched valuations. Is that the general feeling you get as well when you talk to these global investors?
Perhaps, for the last 1 year, we've been also writing this for the investors, that small cap and the mid caps in India are perhaps one of the most expensive market cap cohorts. But it doesn't take away the point that there are still companies in this cohort which have exceptional competitive advantages in their industry. So investors are worried about India being an expensive. But as I said in the beginning, our collection of companies, good quality companies, where perhaps the growth road map may be closer to about 5 or 7 or 10 years very clearly, investors are ready to see through such sort of a near-term valuations. They may have perhaps toned down their return expectations from a 20% in excess to closer like 14-15% holding horizon for the next 5-6 years. But questions remain like this. But they also know some of the Indian companies are going to maintain this high teen growth for a long period of time. So accepting those sort of stories for a valuation, and we cannot take away the point that India is a country where companies are reinvesting for growth, and some of these companies are reinvesting materially ahead of many of their global peers or even Indian peers.
I'm not sure if you track it or you have a view or you want to talk about it, but since it's the topic of conversation this morning, Nitin, wanted to know if you have any take on the Zomato PTM deal, because in line with what we were talking about, discretionary spends or companies investing in clear growth strategies, does this deal tick all those boxes?
We haven't written on it, but my preliminary view on this would be it's a difficult business in which Zomato has allocated its capital. It's a business which has been under built out by PTM for the last nearly a decade or so, and we know that the revenue scale hasn't been that satisfactory. So perhaps it's not that easy business, and Zomato has been trying for the last 5 or 6 years for different business segments apart from its leading business of food delivery. So perhaps this is another bet by them. We'll see how it pans out. But till now, it has been a difficult ride for the incumbent who's selling it.
We've seen that with the success that Book My Show hasn't been met with just yet. But, well, markets do have a mind of their own, and that's the reality of the story. But thank you, Nitin. Good luck. We'll catch you over the course of the next few days as you take the investors through, of course, the next big leaders coming from India Inc. Great getting some perspective from you as you kickstart that conference.